What exactly is CRE? It involves properties used exclusively for business purposes. We're going to explore various types of commercial real estate, understand why they're crucial in the business world, and show how you can invest in them. From offices to retail spaces and everything in between, we'll cover the key aspects that make commercial real estate tick. So, what exactly do we mean when we say commercial real estate? Think of any property that's used primarily for business activities. This could be the coffee shop on the corner, the office building downtown, or even a large warehouse on the outskirts of town. Unlike residential real estate, which is all about living spaces, commercial real estate focuses on business and profit-making ventures. Now, commercial properties are a varied bunch. They come with different leasing terms, maintenance duties, and investment potentials. For instance, when a business rents a space, the lease could range from a simple one-year agreement to complex decade-long commitments. And who takes care of the property? Sometimes it's the landlord, and other times the business owner has to handle everything from fixing the AC to shoveling snow off the sidewalk. Let's talk about some terms you'll often hear in the CRE world. Lease. This is a contract where the landlord allows a tenant to use the property for a specified period and rent. The nitty-gritty of each lease can vary wildly based on whether it's a retail space, an office, or an industrial site. Tenant. The individual or company that rents the property. Tenants are crucial because their businesses bring in the cash flow that makes the property valuable. Property management. This involves overseeing a real estate property by handling daily operations, tenant relations, and maintenance issues. It's a big deal in CRE because well-managed properties are more profitable and less of a headache for the owner. Understanding these terms helps you get a clearer picture of how commercial real estate operates. It's not just about owning a building, it's about managing a space that supports businesses and enhances investment returns. Now you might wonder, how does CRE compare to residential real estate? Well, while both can be lucrative, commercial properties generally offer higher potential returns and longer lease terms, which means steadier income streams. However, this also comes with complexities like bigger upfront investments and more intricate property management. To explain this further, let's look at the differences between two types shown in the table: commercial and residential real estate. Commercial real estate is like the big leagues on average, boasting an impressive 12% in potential returns. That's pretty enticing, isn't it? And with lease terms that stretch over a decade, it's almost like a promise of a long-term relationship with your tenants. Now, think stability. Commercial real estate is labeled high, which could mean fewer sleepless nights worrying about vacant properties. But hold on, it's not all smooth sailing. You'll need a hefty $500,000 to jump in, which is quite the pile of cash. And here's the kicker: the management complexity is also high. So, do you fancy yourself a bit of a property mogul, ready to tackle the challenge? On the flip side, residential real estate seems a bit more down to earth, doesn't it? With an 8% potential return, it's still nothing to scoff at. The lease terms are typically a year, more like speed dating compared to commercial's long-term commitment. The income stability is moderate, and hey, that could be enough for you. Plus, the starting line is at a more accessible $250,000, and managing properties is less of a maze to navigate. Commercial real estate is a broad field, encompassing various types of properties tailored to different business needs. Let's break down the main categories. Office spaces. Office buildings are categorized into Class A, B, and C. Class A buildings are top tier with prime locations and state-of-the-art amenities. Think shiny high-rise towers in city centers. Class B spaces are more about functionality and less about flash, suitable for small to medium-sized businesses. Class C offers more basic amenities and often requires renovation. Location-wise, offices can be in bustling central business districts or quieter suburban areas, each bringing unique benefits and challenges. Retail properties. This category includes everything from small boutique shops to large shopping malls. Retail spaces are designed to attract foot traffic and can vary widely in size and style. Standalone stores are often seen on street corners, while shopping centers group multiple retail outlets together, providing convenience and variety for shoppers. Industrial facilities. Think warehouses, manufacturing buildings, and distribution centers. These properties are typically located on the outskirts of towns and are pivotal for storage, production, and distribution of goods. Their design focuses on functionality and efficiency, accommodating heavy machinery and vehicle storage. Multifamily complexes. Although primarily residential, multifamily complexes with 5 or more units are considered commercial real estate due to their scale and use as rental income properties. These can range from small apartment buildings to large complexes with hundreds of units. Special purpose. These properties are uniquely designed for specific uses that don't neatly fit into other categories, such as hotels, hospitals, schools, or theaters. Their design and management are tailored to their specific purposes, requiring specialized knowledge from owners and managers. Each type of commercial real estate serves a different sector of the economy and comes with its own set of considerations for investors and businesses alike. Now that you have learned about different types of commercial real estate, you may want to know about how investing in it works. So let's talk about it. Firstly, commercial properties can yield more income than residential types, primarily due to longer lease agreements and higher rental rates. Additionally, as an investor, you might appreciate how real estate often serves as a hedge against inflation. As costs rise, so potentially do your property value and rental income, helping maintain your purchasing power. So, how can you start investing? One direct approach is purchasing a property yourself, giving you full control but requiring substantial capital and expertise. Alternatively, crowdfunding platforms offer a way to join other investors, reducing the amount you need to contribute. Lastly, real estate investment trusts provide a more liquid investment option, allowing you to invest in real estate indirectly without managing the properties directly. Understanding these investment channels and balancing the potential rewards against the risks can help you make a more informed decision about entering the commercial real estate market. Now, let's explore how the broader economy impacts commercial real estate and highlight some current trends and future projections in this dynamic sector. Economic factors like interest rates, economic growth, and consumer behavior play pivotal roles in the health and viability of commercial real estate. For example, if interest rates drop to 3%, it suddenly becomes cheaper to borrow money. This could really boost the number of people wanting to buy properties. More buyers could mean a lively market, with maybe a 15% rise in commercial transactions. On the flip side, if the economy hits a rough patch and growth slows to just 0.5%, businesses might put the brakes on getting new spaces. This could lead to a 10% drop in the demand for commercial spots. These numbers show how closely tied the real estate world is to the broader economy's ups and downs. One significant trend reshaping the commercial real estate landscape is the rise of e-commerce, which has surged by 15% in the last year. This shift is fueling a 20% jump in the demand for industrial properties like warehouses and distribution centers as businesses aim to bolster their logistics to cater to online consumer needs. Meanwhile, the retail sector is navigating choppy waters, with a 10% increase in online shopping preferences leading to about a 5% drop in foot traffic for traditional brick-and-mortar stores. These stores are now reevaluating their strategies and physical presence to stay competitive in the evolving market. Another trend is the increasing impact of remote work on office spaces. With 40% of companies now offering flexible work options, the demand for large, centralized office spaces is feeling the tremors, experiencing fluctuations of around 30% as some businesses downsize their square footage. This is prompting a rethink in office design and location, shifting towards hybrid models. These models aim to cut space requirements by up to 20% and prioritize more collaborative and flexible work environments, reflecting a 25% increase in demand for spaces that can adapt to the new way we work. Looking ahead, sustainability and technology are set to play even bigger roles. Investors and developers are increasingly focusing on sustainable practices, including energy-efficient building designs and operations. Moreover, advancements in technology, such as smart buildings and automation, are poised to further influence commercial real estate by improving operational efficiency and tenant experiences. Let's wrap it up. Today we've explored commercial real estate. We've looked at different types like office buildings, retail spaces, industrial sites, and special facilities. We've also talked about why investing in these properties can be beneficial, such as helping diversify your investments and keeping up with inflation. Of course, there are challenges like high costs and needing to manage the properties closely. Commercial real estate is shaped by many things, including economic changes and new technologies. The growth of online shopping and changes in how we work are changing what kind of properties are in demand. Also, the push for greener buildings and advances in technology are changing how buildings are built and managed. Understanding all these aspects is key if you're thinking about getting involved in commercial real estate. Whether you're an experienced investor, a new business owner, or just curious, this sector offers both complex challenges and great opportunities. Thanks for watching. Our channel is dedicated to making investing, finance, and economic concepts easy to understand, empowering you to make smarter financial decisions. If you found this video helpful, others might too, so please share it to help them benefit as well. Help us spread the word by subscribing to our channel. Let's make finance and investing knowledge accessible to everyone. And don't forget to check out our website at www.investingcouncil.com for more information and resources. See you next time.